Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon closing commentary for the financial markets this afternoon. Markets really under some stress today, certainly after weighing macro data from China and the overnight markets, as well as data out of Europe and some unsettling data out of the United States after yesterday's FOMC decision. The S&P actually down about 29.5 points on the day. The NASDAQ down about 71 points on the day. We see bond yields actually ticking a little bit lower as well. 10 years back around the 162 basis point level, and the 30 years back around 269 basis points. Really, the bonds really holding their range in the futures markets. The 30-year right around 149. So right about the middle of the range, the upper end of the range, and the 10-year actually around that 133.11, so toward the lower end of the range, holding well here on the day. But really the most action that we saw was in the U.S. dollar. The U.S. dollar up about 80 cents on the day at 82.52. So really investors fleeing the risk of the equities and the commodities moving into the dollar, and really we've seen a bit of a correlation pick up lately between the euro-dollar pair and what equities do, and we did see the euro against the dollar trade significantly lower on the day. Really tomorrow I would look for probably just a relief rally and consolidate some of the sell-off that we've seen here for today. So I'd be looking at any of these relief rallies really in a broad spectrum of markets, from equities to crude oil to potential of gold as any selling opportunity, because we've really seen more of a downtrend come into this market, particularly after yesterday's FOMC meeting. We see the Fed is really just kind of sitting on the sidelines at this point. We know that they're standing by waiting. They are ready to do something. It's a matter of what the next chess move is going to be, and certainly the next chess move in that game, as we said yesterday, is going to be the European summit next week, and exactly what we're going to get out of that summit. While we're talking about Europe, certainly all eyes today were on the Spanish debt auction. What we can say about that Spanish debt auction is that they were able to get the auction off, albeit it was only 2 billion euro that they were looking to get off. They got it off well over 2 billion euro, but I think the most important thing to look at is the yield that they fetched to get those bonds off. How much longer can Spain afford to go to market and pay these kind of yields for the type of tenures that they're looking to get off? That's the question that the market really is asking at this point in time. Again, we'll be looking forward next week to a lot of different data points. Nothing really on the docket tomorrow, kind of quiet, so we'll be using any rallies that you see really as relief rallies to actually sell into, and probably looking more at bonds as actually a buying opportunity. Give me a call at 888-596-5817, and we can discuss any of these opportunities. And as always, futures trading is not suitable for everyone. It does carry a high degree of risk. Please give me a call and we can discuss these opportunities.